But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Look, thank you for having me on the channel. I appreciate it. When he's back, I will leave the room. I just wanted to say if you could give me just a moment of your time. First, thank you for once again lending me your financial support. Once we get this program, this campaign, on to the presidency, I would like to guarantee to each American free cereal. You might be asking yourself, what is free cereal? Why free cereal? It's the first meal of the day. And when you're going to your free college, after you've had your free doctor's appointment, what better than having some free cereal? I like cereal. My favorite, not featured here today, is hammers and sickles. Little marshmallow pieces shaped like hammers and sickles. It's a good, nutritious cereal. So just remember, free cereal if you vote for Bernie. I will put free cereal in all of the programs. We will do whatever it takes with the Federal Reserve to establish trillions of dollars allocated, unlimited spending, 60 trillion, 100 trillion, trillions upon trillions of dollars for free cereal. Thank you.
I don't know how he snuck in here or how he gets his advertisements on the channel, but Bernie, I showed him the door, I kicked him out, he's gone. Welcome back to the JUNIUS MALTBY channel. Glad you could be here today for, of course, a boring look at the news and some discussion. I don't know what keeps bringing you back here. The only reason I'm here is because you're here. And so now we're both here, so we might as well do something. This was interesting news today. Confused, stricken with his Alzheimer's and dementia, Biden announced he was dropping out of the race and decided to endorse Joe Biden. So I thought that was an interesting piece of information there that we covered. And there you can see him peering out the window, just contemplating probably his navel or why it is the sky looks the way it does on this particular day. Or maybe he's not thinking about anything at all up in that little cranial vault of his. We should probably start talking about the impotency of the Fed. Impotent, inept, whatever you want to call it. You know, a friend of mine sent me this chart today. He's one of the big contributors here of information, slides, propaganda, paraphernalia, information. He's out there. He's kind of like my ears in the field sometimes. He's a world-traveling, successful individual. I won't divulge exactly who he is, but let's just say he's a titan, a magnate, someone who is influential and has some pretty strong connections. And we have good discussions, he and I. And during today's discussion, and he's been doing this all week, he's been sending me the velocity shares daily, the VIX. And of course it was blowing up. So when I saw this, when he showed me the 142.2 up 36.11, up 34%, I hadn't seen anything else in the markets today. I didn't look at anything. I didn't have time. I was actually quite busy. I was being bombarded and inundated in what has become the war of my own existence. So while I was on that front and down in the trenches, this information came up. And then it took me off on, of course, my little 5-minute rabbit hole of checking on stocks, the markets, equities, and metals. And of course I could see, well, the 1,100 or whatever points that everyone was freaking out about the other day because the senile Democrat won Super Tuesday. Everyone was getting all excited, and they were saying that's the reason the market rebounded so much so. And I just thought, really? That's what these guys place their bets on? A Super Tuesday event? For a senile guy who's just happens to be a decrepit puppet of some of the people that might have connections at Wall Street? who's most likely not going to win at all? Okay, well, if that's what gets you to buy, all the power to you. But of course, most of that was sold off today. And again, I think a lot of this is excuses. Remember, if you go back even on this channel, not that we don't call anything. There's not really any pearls here. This is just a medium in which other information passes through. I don't come up with this stuff. I'm not particularly intelligent or organic. These are just extemporaneous ramblings here on the JUNIUS MALTBY channel. But if you go back into the fall, August, even September, and you start looking at those discussions we had about the repo market, what's going on with liquidity, the problems in banking, the coming financial crisis and a recessionary risk, what was taking place, some of the experts we were quoting and the numbers we were looking at, there was an event coming. We knew that. And that's why I don't think this little microbial, we can't say the word, I'm sorry, I wish I could tell you right over the mic, I just can't say it. YouTube will not let you say it. If I put the word into this mic, or if I write it in the comments or in the descriptions of the tags, this video will get flagged. That's what they're doing right now. They don't want you talking about it, so I won't. But it's the thing that makes people cough, the Kung Fu flu. That is basically an excuse for these guys to dump their positions. And this is what I wrote, my friend, during our discussions today. At one point, well, I'll just read you some of it, because he was talking a lot about crypto, actually. He said, not XRP unless Ripple comes out with a new crypto like XRPX, basically saying XRP is here to stay. This is his opinion. He was talking about the non-believers have been scared off. Only Wall Street and the Ripple ticks are buying, those that are really dedicated. And then we were talking about gold. He said if we get those second effects from this panic, because we'll talk about gold in a minute, but it's getting close to 1,700, ladies and gentlemen. He thinks it's going to hit 2,300, this friend of mine. It will escape gravity at that point. And I replied to him, because I was looking at the slides he had sent, that Velocity Shares VIX Fear Index is doing this every day. Markets lost another over $1 trillion today. Gold closing in on $1,700 an ounce after only passing $1,500 on New Year's. The repo market and liquidity disaster we saw in the fall, autumn, is the real problem. The economy was dying then, and with talk of the next crash after the longest undisturbed bull run in history, the elites started exiting before this hit, and traders are using this simple, benign cold as an excuse to dump over inflated equities, propped up by the ease and loose Fed policies. With travel grinding to a halt and trade, with supply chains disrupted already, gears are slowing, and the bailout bubble inflated since 2008 is popping. This could be radical. And of course he replies, it was genius move. Plus they couldn't dislodge the president, which they were trying to do so desperately. So there you have it. The VIX is up. The Dow took a beating today. All of them down around 3%. The Dow, the S&P, the NASDAQ, just getting beat up. But let's take a good look here at the Dow again. Down 969 points today. Nearly $1 trillion wiped off the books, down 3.58%. You can see that dead cat bounce there as it tried to pull up. However, this is, according to some, only the beginning. Sequoia Capital, a venture capitalist firm, releasing some statements today, as well as Goldman Sachs. Many of the big institutions talking about what is coming and what is to come with the direction of these markets and this black swan event. A lot of them finally admitting that we could be on the brink of major recession-like activity. And this is where you really hope, if you're on the brink of like retirement or punching out somewhere and you've got some accounts, or if you have a lot of exposure into the equity markets, you should really be taking a close look at them over the last month or so. Here's a gold chart, however. Now this is gold going back just today. This is just the one-day chart. And you can see it really popped up there. That 270 you see there is not the day movement. That is right now after hours trading, up $2.70. But you can see gold definitely had a really strong day. It closed up there. About the highest I saw at one point when I checked in on it was around 1677, 1676. You can see the day high there was recorded at 1677.30. When it closed in the States, I believe it was around 1674, 1675. It's been fluctuating since then. But again, that's only $25. Let's call it 30. We're $30 shy of the 1700 mark, ladies and gentlemen. Okay, now this coming at the bears, many of the gold bears, as we entered this year and closed out last year, were saying this couldn't and wouldn't happen, that it was impossible. And now it's becoming, I think all of the bears, the gold bears, are in some kind of a deep hibernation bunker someplace, because I'm not seeing them. You can't really find them today. With what's going on, the backdrop, and in the environment, in the financial sectors, and what's taking place on Wall Street, you would have to be an idiot to be bearish on gold, especially when you're looking at the charts. You don't ever look at it just a day chart for something, but we're looking at this day chart here for gold. It's phenomenal. Let's take a look at its multi-decade chart and see what it has to show us. So this is gold going all the way back to, I believe, 1985. I was just a little boy back then. And as you can see, it limped along. Now remember, this is what's hard for some people. I don't understand. So many people do not understand this. Gold had only been legal to own. When you look at the beginning of this chart, you could only legally own bullion gold to invest in since 1974. And even with that, the market was heavily controlled and manipulated, and still is manipulated. There's a lot of strings attached, a lot of levers, and it's a complex market for people to understand. It is not what you think. It isn't just supply and demand, and well, the only reason gold's worth this is because people don't really want that much of it today, and we don't have a use for it. There's a lot to the conversation regarding the price point and how it's discovered for gold. But for simple purposes, especially for those who are not your average or normal viewers here of the JUNIUS MALTBY channel, the ones that mostly just swing by for their own nefarious motives, for those who are chewing on their favorite flavored crayon, we'll break it down simply. You couldn't own gold until 1974. The U.S. government had it monetized on the books at $42.50. Of course, the free market said it was worth more than that. It popped up there in the 80s. You can't really see it here. It's off the chart to the left. But it fluctuated, limped around. Brown's down happened 1999 when the Brits, with all of their wisdom, dumped gold on the market, punched it down to about $256 per ounce. That's as low as we ever saw it since then. And since that time, as you can see, coming out of the year 2000, it's been that beautiful upswing, that nice curve, and then almost like a hockey stick type behavior there after the financial crisis. You can see it dip off there at the beginning of the crisis, as we talked about, to raise cash for funds that were bleeding. And it peaked out there just shy of the 1900 to 2000 range up there. Retreated from that point forward, but you can see it really stabilized above 1100. It never went below that 1100 mark again. Never dipped below 1000. After it passed 1000, it was done. It blew past 1,000 once, and that was it. It stayed above it since then. Very strong support there. And if you looked at this chart like some of the other charts that are out there, it's like a very slow motion bull flag pointing upward. And when you look at the behavior of gold with what's going on, again, I don't want to repeat the same things we always discuss here, but this chart is one that we don't visit too often. When you look at currencies, you look at the sovereign debt crisis, and you look at what's going on in the equities markets, and overall, just look at how much they just monetized out of nowhere just to try to fix this flu. What was that, 8.5 billion, I think I saw? I don't even pay. When the government talks about the billions they're going to print off and use for something, I don't even pay attention to it. It doesn't matter. They could call it whatever they want. They could say, hey, we're going to print off 67 Googleplexes of money, and we're going to use it for this project. It doesn't really matter. It's impossible. Everything they're doing from this point forward is impossible. And every professor and economist that you and I respect and talk about here knows that. They've acknowledged it. And they're able to actually articulate why it's impossible. But you got the idiots in suits over in Washington that get elected by the masses, by the democratic process, where anyone can vote. So there you go. You have guys like Chucky Schumer and Nancy Pelosi in office making decisions. Back to the chart. It's looking good. It's looking strong. It's looking like it's going to do really well in the decades to come, as it will. And a quick peek at the 5-day chart for gold. Also looking good, reacting to the equity markets that are in turmoil and bleeding trillions of dollars, it seems like, every day. I can't imagine the guys that are sitting there on the verge of retirement. They got money stuffed into equity-bearing accounts, things with a lot of dollar exposure, whether the 457s, 401ks, all those things, those little pre-pension, I'm getting ready to go golfing for the rest of my life accounts. Those things are bleeding money now. If these guys aren't positioning themselves in more stable funds, more fixed interest rate accounts, they're going to have a really, really tough wake-up call here pretty soon. This is the time where you really got to make strategic and articulate movement of your chess pieces. Because remember, the only person who's moving your pieces on the board in this chess game are you. And if you go to sleep on it and you wake up and you happen to be in check, you went to sleep. You should have moved your pieces. You should have defended yourself. So right now is a good time to be positioning. I think a lot of guys that are in that position should be looking at, like we talked about a couple months ago, where the recommendation came down from up on high from some big funds and some big boys, big economists, talking about increasing exposure to around 30% or more of physical gold for people in that position. But again, I'm not a financial advisor. That's just what other guys who know a thing or two have said that I've read and relayed to you here. So I think that would be pertinent at this point. Silver, on the other hand, it's up on the screen. You can see it there. We were going to talk about it. Sometimes I get depressed talking about silver. On a day like today, gold blew up, markets collapsed, and what did silver do? Someone kicked his crutches out from him while he was limping down the sidewalk. He fell and he bashed his head, and he had a really hard time getting up. He's bleeding. They rushed him to the ER, and it doesn't look like he's going to be able to come out of the unit for a couple of days. He's hurt pretty bad, silver. He's bleeding still. They're trying to control it, but you can see on his chart there, his medical chart, it's all over the place, up and down, volatile, and still hanging out below 1750 at 1733. So hopefully he surprises us, pulls a miracle. Maybe they can fix him up like a robot, make him the bionic boy, but so far, silver is just that little crippled kid in the metal family that has a very hard time. All kinds of firms like Sequoia are coming out now talking about the consequences of this event, the direction it could be taking, saying that it could cause more damage to startup firms and the overall economy. Gundlach says that the Fed panicked and short-term rates are actually headed towards zero, which means they'll have to drop them again, and I wouldn't take that off the table at all. As a matter of fact, I wouldn't doubt them doing so within the next 2 months as far as dropping the rates again. He's saying maybe in 2 weeks. We've got the 10-year Treasury down, of course. I mean, look at the chart. It's unbelievable. You wonder who those are that continue to buy 10-year Treasuries. Well, go ahead and dig back into the archives a little bit if you're interested in the last several months of the discussions that were building up to this point. You can look at some of the more interesting pieces when we talked about the move by the elite to begin vaulting gold. That was a very interesting red flag that pointed to, I believe, some of the events that we are seeing unfold around us today, as well as the Dutch revaulting their gold, repatriating gold. There was some information there. But just a lot of interesting news that we covered back in the fall, pointing to, I would say, nothing else but what we're seeing occur today. Again, not that they predicted the Kung Fu flu. That's not the cause. We all know that. It's merely the pin that popped the bubble. So go ahead, dig in for your own boring enjoyment. And thanks, as always, to all 25,019 of you now that are part here of the JUNIUS MALTBY channel. Thanks for all you do to support the channel, liking, sharing, subscribing, and even donating pennies every once in a while through the donation ability. I appreciate that very much. Your motivation, your kindness, and generosity is much appreciated. All right, until next time, until something interesting pops up anyways, thanks for tuning in here to the JUNIUS MALTBY channel for another boring discussion on gold, and the economy, and what's actually happening. Take care.